Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, the equity markets are a little bit under some selling pressure. So let's talk about that a little bit. Well, last Tuesday we had a 1% sell-off, 1.5% on the NASDAQ. It's pretty much a sell-off across the board, and the market's been struggling a little bit since then. And we talked about this in the other presentations. We're starting to see a little breakdown in the small caps and the transportation sector, and waiting to see if it was to drag the rest of the indexes down with it. Now, the long-term trend, no doubt, is still very much intact. So this only really concerns you if you're a short-term trader, but we can also take a look at the industry groups that are acting well versus ones that aren't acting well. That can also give us a clue as to what's going on in the market. As I mentioned, the small caps were breaking down as the transports, and it's kind of started to pull the rest of the indexes down. However, the technology sector, XLK, or the QQQs, are still acting very strong. In fact, if you take a look at the NASDAQ composite, it's still well above its 50-day moving average, which is about 57.57. So as long as it holds up there, even the short-term trend in the NASDAQ can be said it's intact. Now, even if the NASDAQ corrected 8%, that would take it down to its 200-day moving average. And if it bounced off there, still would be, the long-term trend would be intact. The S&P 500 this morning, it's testing its 50-day moving average right at about 2330. It undercut it. It's above it right now. We'll see how it ends up on the day. It's very possible that the S&P 500 can fall down into the range where it was basically through December and January, and that's right between about 2280 to 2230 is a 50-point range. And if it actually got down to 2200, that'd be about a 5% correction. That's 200-day moving average, and that'd be fine. The long-term trend's still intact. However, as we talked about last week, gold and financials, looks like gold's winning that race. Financial stocks broke down pretty hard last week. A lot of the big banks are below its 50-day moving average. So that's one sector that you might want to lighten up on until we see some better improvement in there. And also, we saw utilities act very well, so that's the kind of showing you the market's getting a little defensive. That's not the kind of thing you want to look at. But again, looking for the pockets of strength, we talked about technology, the XLK, that's still acting very well. And even this morning, when the Dow's down over 100 points, we have biotech stocks. A lot of biotech stocks are green, acting very well. And biotechs have basically been one of the better performing sectors year to date. They did get hit with everything else on Tuesday, but however, they bounced back pretty well. And we see them bouncing this morning. So that's one area you might want to take a look at if you still want to stay long in this market. So, in summary, the long-term trend is intact. The shorter-term trend, we're seeing a little correction, a little choppiness. It's to be determined. We'll have to let price and volume be our guide to see how bad it could be. However, one thing is to note that the sentiment changes like on a dime. I mean, people are long the market. There seem to be only long the market, 1 foot in the door, 1 foot out the door. The second we get a 1% sell-off, the world freaks out. And you can kind of see this in sentiment surveys or looking at the National Association of Active Investment Managers. They're basically at their lowest point this year for being invested, right at about 69%. January, they're like well over 90%. So that just tells you how quickly things change. Coming into this morning, the put to call volume ratio was at 1.21, meaning Friday people really loaded up on the puts, expecting the worst to come. And usually when we get that scenario, when the sentiment turns so negative, it ends up being possibly just a short-term correction. But as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting you from CME Group trading floor, and have a great trading week.